Hey everyone, welcome back to our weekly market outlook. This is for the 17th of February 2025. And let's just jump very quickly into what we have last week. And obviously, point of interest, it's the CPI numbers from the US. I think market is not wasn't pricing in for a higher than expected inflation number. So we got headline inflation coming in at 3%. That's higher than 2.9%. Also, growth per month has also increased for the inflation. The CPI is at 0.3 to 0.5. Core CPI has gone up from 0.3 to 0.4. And also we got testimony from Chair Powell there, maintaining their stance that they are not really in a rush to start cutting interest rates there. So impact on this higher inflation number, and in terms of what the monetary policy stance is, it doesn't cause a lot of impact. In fact, it kind of market was just basically looking at it and say, sure, we got a higher inflation number, but the FOMC wasn't even going to do anything in the first place anyway. So it does mute the higher inflation impact there. PPI has also increased a little bit here, from 0.5 to 0.4. Sorry, we saw a little bit of a drop there from 0.5 to 0.4 in terms of growth there. And also for the core PPI, 0.4 to 0.3. And basically this kind of skewed the estimates for the PCE numbers to be a little bit on the lower side. And that kind of muted the initial reaction that we had on last Wednesday for the inflation number there in the US. Also, retail sales number comes in pretty bad, 0.7 to negative 0.9. That's below consensus of negative 0.2. Core retail sales was also down significantly, 0.7 to negative 0.4. And that does put a lot of pressure onto the US dollar. All right, so let's take a look at the numbers this week. A lot of interesting numbers here. Obviously, on Monday, you're not going to be looking at a lot of market movement here. Canada and the US is going to be closed. On Tuesday, we're going to be looking at RBA interest rate decision, and RBA is expected to cut by 25 basis points. That would be on Tuesday. And if we take a look at what's expected on Wednesday, we're looking at a potential for the RBNZ to cut by 50 basis points. That's going to be on Wednesday. So expecting more cuts to happen. In terms of the UK inflation number, we're expecting a little bit of an increase from 2.5 to 2.8%. And on Friday, we're expecting comments from Governor Bullock here from the RBA to kind of justify if they're going to be cutting more rates in the future, what's their monetary policy stance. But for this week on Tuesday, we are expecting the RBA to start cutting interest rates by, obviously with 25 basis points, the RBNZ with more aggressive cuts there at 50 basis points. That's all going to be for this week. We're also looking at manufacturing numbers here in the Eurozone as well as the UK and the US. Not expecting much change in terms of the manufacturing numbers and would it cause a shift in the market. At this point in time, I doubt it will actually create a lot of shift in the market. On Sunday, we're going to be looking at Germany's election and see what the market is preparing for that upcoming election this week here. All right, let's just jump into the technicals. Let's take a look at the Aussie USD. Aussie USD, very interesting situation here. It is actually inside the Ichimoku cloud. What we're looking at here on the majors, especially today, is that all of the majors are attempting to break or transition their existing trend. So with Aussie USD, it is currently inside the Ichimoku cloud. In terms of where the resistance is, it is the upper end of the bearish order block that we have here, exactly at 64 cents. That's also where the weekly pivot is lining up. Resistance 1 at 64 cents. In terms of support, we're going to be looking at the weekly pivot as support. That lines up with 63 cents, which is a psychological price level. And also the next available support is going to be at 62.50, where the support one is currently located. Now the positioning for this puts the Aussie USD to we anticipate the Aussie USD to be traded within the Ichimoku cloud this week if there is no break above 64 cents. But any break above 64 cents, then we are anticipating further push higher, and we expect transitions from all the major currencies here, especially with Aussie USD. Similar situation with the Euro USD here. We're now back at that key level 1.05, 1.0550. Any break above 1.0550, that will transition the Euro USD above the Ichimoku cloud. That would transition the trend from a downtrend to an uptrend on the Aussie USD as well as on the Euro USD. If it doesn't break the Ichimoku cloud, then support-wise, it's very similar with the Aussie USD. It's going to fall onto the weekly pivot. We're anticipating supports coming at 1.04 to 1.0425, and below that at 1.0350. This would still put price inside the Ichimoku cloud. So very similar situation with the Aussies here. And the sterling, I think this one is a little bit of a winner here for compared to all the other two majors that we just discussed here. We are also looking for that transition above the Ichimoku cloud. We didn't manage to close above the cloud last Friday, but as Monday opens, it got shifted above the Ichimoku cloud. So if this one here continues to push higher, then the next available resistance that we're keeping an eye out for is going to be at 1.27 to 1.28. That's basically the next available resistance. But beyond 1.28, you're not going to be looking at any resistance until 1.3 on the sterling here. Now, if we fail to overcome the bearish order block that we have here, and if price moves back inside the Ichimoku cloud, then we're going to be looking at support firstly at pivot 1.2550, and then the support one is going to be at 1.24. And again, we are looking at that possible scenario where if all the other majors does not transition cleanly out of the Ichimoku cloud, it will be trapped inside the Ichimoku cloud at those psychological levels, and also where the pivot and the support ones are lining up, which would put all these three majors to be traded still inside the Ichimoku cloud this week. So either we could get a really quick runoff to the upside, or price could just be traded inside the Ichimoku cloud in more or less a choppy trading. All right, lastly, we have the Dollar Japanese Yen. Dollar Japanese Yen, it's actually a very good indication to where the US dollar is likely heading. Remember, with the Aussie USD, Euro USD, and Pound USD, that all three of them are attempting for a trend change through the Ichimoku cloud transition. Now, with the Dollar Yen, the past 2 weeks, it has actually transitioned below the Ichimoku cloud, and last week's price action, if we take a look at it, it pulled back to test Ichimoku cloud. It also pulled back to test the previous support at 154.50 level, and it got rejected very cleanly at 154.50. In fact, we even saw a bearish piercing on that rejection last Thursday. On Friday, it follows up with further push to the downside on the Dollar Japanese Yen. Right now, we are eyeing support at 152. Any break below this support at below 152, that could push price down. We are looking at a move towards 150, 149, 148. Why these three numbers? That's basically where the bullish order block is currently located. So even though it is transitioned into a downtrend, remember that we always talk about that 10 yen range on the Dollar Japanese Yen. That means price is currently traded sideways between 150 to 160. I know it's a huge range, but that is what it is on the Dollar Japanese Yen. So for the Dollar Japanese Yen, even though it is below the Ichimoku cloud, we expect further weakness on the US dollar. The downside is likely going to be limited to 148, 149, 150, where we have that bullish order block. Those are going to be supportive enough for the Dollar Japanese Yen to stop any strong push lower on the Dollar Japanese Yen. But yeah, from a technical perspective, this one here has transitioned below the Ichimoku cloud, so we anticipate further weakness on the US dollar versus the Japanese Yen. All right, so with that, good luck to your trades for this week, and I'll see you soon.